What is up, team? Thank you so much for stopping by once again. This is ARCa coming at you with an Fngr technicals, raw price action, and statistical thread of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so today during the live stream, somebody actually asked me a very, very important question, and it actually did open the gates to a formation that we did look at before, but we, for some reason, omitted and stopped looking at it, right? So, based on other metrics and other whatever distractions happening in the markets, right, team? So, let's go ahead and just pull up that formation itself. So, if I will have you remember one thing, team, is actually the broadening descending wedge that we have been looking at on the daily time frame. We've looked at it on the 3-day as well, right? So this is a bullish formation. It represents anxiety, right? And it's in the process of a breakout confirmation, which is extremely powerful. Okay, team, it is also following the golden rule of 3 pretty carefully too. So if we start counting the resistances, we have test number 1, we have test number 2, test number 3, and test number 4, right? So this is the true breakout number 4, and what we are looking at here is the potential of starting the test. As you can see today, we actually bounced pretty nicely right off of that low of about, what was it, 385, right? So we were expecting a $4.38 touch based on this this resistance level, right? So now, if you're starting to look at the formation, then it also makes sense as to why we would actually come back down to the area of 385, which is something that I unfortunately didn't see before, right, team? My apologies to you, but we are actually looking at it right now, and the beauty of having that live stream is that someone reminded me about looking at the master formation that he asked me for, I forgot his name, and I do apologize if you do remember what, if you asked, right? So go ahead and put yourself down in the chat or in the comment down there, and we'll go ahead and highlight that. But yeah, he asked me if there was a large formation that Fngr and GTII share. Well, not necessarily. They don't share this, but there is a larger formation to look at here in Fngr that would suggest a few targets for us to look at, right? So now I am getting some very interesting signals for the short term, and it's something that I haven't seen before. And so let's go ahead and pull up DBSI. This is the ARCa algo that we actually just released, and this is one particular time frame that I have to say that is just of critical importance here, is the daily time frame, because this is the area where we're looking at the bears lead 77% from the bulls at 23%. So what this indicator does is actually takes a metric or a score from every single candle printed throughout the entire trading history of the asset itself. Then it gives you an average strength displayed here in these boxes, right? So you can see here that the daily time frame clearly shows the 77, which is very interesting, because if I show you this, it would be pertinent, right? So now notice this right here. This is the daily time frame SMA 50 versus the SMA 200. So this moving average strategy is a very powerful strategy, because on the daily time frame in particular, this indicates that we would be starting a macro bullish trend, so, or a bull market, right? So when you're watching the news, and then they say we have now fallen below the 200-day moving average, and you have no idea what they're talking about, well, they're speaking of the daily time frame SMA 200 and the market falling below that, which would, in essence, start a bear market cycle. As you can see here, we've already broken outside of the 200 one time on the daily, and we have used it one time for test, and then we moved onwards, right? So now the thing is that we did break out, but we also need to validate this support, because it was enacting resistance from the broadening descending wedge. So the validation of this support is happening too. But now it's not only about validating the support of the SMA 200 or just this. It is about validating the potential golden cross that's about to happen here. So whenever the SMA 50 crosses upside of the SMA 200, that officially gives you an indication of a potential bull market starting. Okay, team, so if we look back historically at those crosses, take a look here, right? Price action rallying, faces the resistance Well, I mean, first of all, right, let's take it from here, right? So resistance from the SMA 50, resistance SMA 50. We finally cross upside of the 50. Then we come back and validate the SMA 50 support. We run to the upside. We resist from the 200. We move backwards, right? So now, I'm sorry. We move onwards and upwards. And in this case, the golden cross happens. And look what happens here. So we come back to the 50 and start validating it as a support before a continuation to the upside. If price action starts to slow down, then that's when we go start to validate the strength of the SMA 200 just to see if it's valid. Right, team? So that's kind of what I'm looking at here. So historically speaking, the SMA 200, or I'm sorry, the SMA 50 crossing over the SMA 200 is in general, I'm talking in all markets here, crypto, your traditional equities, bonds, everything, right? The SMA 200 is critically important for us to look at. Okay, team. So yeah, this is, I think that could be what's happening here. Right? Either we find a bounce right from the 387 zone that we're at, or we can actually find a bounce from the 387 and resist from 450, at which case the SMA 200 may be located a little bit higher on the next day or two of trading, in which case we would then come back to that area of about 380 potentially. I mean, if there is a range to kind of look at here, then I guess, right. So if this is, let's see. So if this is the 385, the 380, 280, 385, whatever that we face today, this was the zone here. It was also the gap, right? It was also this daily gap. So we bounce from that gap, and we resist it at the top side. We're not moving. We're a little stagnant right here. So if there's a range to be looked at, then I would suggest the bottom. See, this is right here, right? We're right here at the bottom side of this area here. So then if there was a range to be looked at, it would be the completion of this chop box right here, and it would be right down to this level. I would say at about at the very lowest point, I guess it would be 352. And now if you do look to the right, 352 just happens to land right where that SMA 200 is located. So I'm not saying that 352 is the bottom side. In fact, I am saying that the SMA 200 may have a shot at moving a little bit higher based on some very, very short-term price action. And then this will probably move up around the area that we're talking about anyway, around 380. Right, team? So I know today there was somebody that was, well, you said 430 and blah, 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 and this and that. So, team, please remember that I am not, I haven't backtested Fngr like that at all. We're talking about discretionary measures here, and this is how we're reacting. We're reacting based on the current data happening. It's not necessarily that this is being fooled around with. It's that there is so much psychology happening right now that it's pressuring the price action up and down. We're talking about many millions of retail participants trading this ticker, and at every single moment of the day, they're buying and selling. And we also have shorts and we also have longs. So there's going to be larger price movements. And I remember I explained this to you a couple weeks ago. I said there's going to be a lot more psychology. There's going to be a bunch of comments and a bunch of people talking, right, as soon as we start getting the larger swings. So you can see this first swing that we got was a little bit smaller. Everybody was saying it's dead, it's gone. We came back to a relevant area of support right over here. We bounced to the upside. And now this bounce right here, this one is a lot larger than this one. So this is what I meant, team. Back when I told you that we're going to be facing some larger swings as we move up, we're going to be facing some larger swings as we move up. Keep that in mind, okay? This is going to be a true test of wit here, all right? So as long as this thing keeps on moving up, there's going to be larger and larger swings. I mean, I can't even show you what AMC did when it started rallying on the January and June runs. I'm talking about, let's see, $10 swings. It went. Sometimes it even jumped. It even jumped $30 swings. I mean, I'm reaching all the way up there and capitulating all the way back down, invalidating all kinds of things, stopping out all kinds of people. So if this thing is not even squeezing yet, and we're having this trouble right now with sentiment, team, I don't even know what I'm going to be able to tell you when this thing is actually ripping to the upside based on covering. So if you're not able to take this pressure right now, consider consulting a doctor. before you take the adrenaline pill that FNGR is about to feed everyone, you know, and then it's going to really start showing you some swings that you don't want to be, you know, exposing your heart to, right, team? So just know that this is playing a play as well. The overall take profit and the overall price objective here, based on the traditional rules of trading a broadening descending wedge, is located right up here at about, let's see, let's highlight it. That's a 14.13. Again, I'm not saying that we're going there. I'm just saying that this is how to trade a formation like this one. Okay, you wait for the fourth test or fifth test, true breakout of the resistance here. We validate the resistance, then we continue onwards and upwards. There's a lot going for FNGR, considering the fact that we have this resistance as a new support, and we're about to get a golden cross down here. Team, that is incredibly important and very powerful. The validation process here, it's going to take whatever time it needs to take in order for us to get this down. There's nothing I can do or say for us to start ripping to the upside. I get it. We're impatient. We want our money, whatever. The point is that there is a validation process and a confirmation process in play that is bigger than all of us. It is way bigger than all of us. It is collectively a psychological play that's happening here. Trust me when I say that professional traders are waiting for that golden cross to happen. When this golden cross does happen here, could be Tuesday, Wednesday, Thursday, I don't know. Right around there. Somewhere next week though. Right? So when that golden cross does happen, price action will immediately react to that. The golden cross is a confirmation, team. And those are the confirmations that we're waiting for. So even if we had to retrace down here all the way to the present 346, then so be it. But the thing is that we're prepping for it, and that's very powerful, team. Okay, so keep your eyes on that. Now I want to pull up something that shows some confluence here to the space of the SMA 50 and the SMA 200. And that is actually, it's very interesting that this is the ARC balancer. This is the other algorithm that's giving us a potential, well, it's actually showing us the resistance levels based on I set this to a different smoothing level. Let me go ahead and show you. So balancer, I changed this. The high-low pivot days back, what that means is a look-back period for the high-low pivots. So I set this to a 14-day look-back period, and it actually gave me some very confluent targets. So this support zone here, right at the end of this, at the balancer cloud here, is actually right in between the SMA 50 and the SMA 200. So meaning that what I'm telling you is if we face a little bit of an upside here in the coming day, and we face that resistance, this here would essentially move up to right where the SMA 200 is located. And then everything's going to start lining up like magic here. Okay, team. Another thing that can give us a continuation to the downside is the fact that we are below the daily VWAP. This is the volume weighted average price, and we are below it. Okay, so that is usually a validator for a continuation to the downside. Please remember that DBSI just gave us a score of 77, but this is what's really strange. Okay, so if we move on upwards in time, then you start to see that the bulls are in control. 74% bulls, we have 26% bears. Now, if we move on to the 3-day, 91% bulls, and we have 9% bears. Okay, team, so and then now the 5-day time frame, 79% over the 21%. But look at this. As soon as we start diving into lower time frames, there isn't an indication that the bears are leading anything at all. Okay, we're going to remember the 12-hour. Okay, let's just come back to the 12-hour to this. But first of all, look at this, 50-50. All right, let's look at the 8-hour time frame. We have a 42 with a 58% bears leading. 6-hour time frame, 50-50. 4-hour time frame, 50-50. 3-hour time frame, 49-51. Bi-hourly time frame, 49-51. Hourly time frame, 50-50. 30-minute 50-50, 15-minute 50-50, 5-minute 50-50. I've never seen that in my life. That is incredible. What I'm looking at here, team, is that even in the immediate short term, while yes, the daily time frame is showing that the bears are in clear control, the immediate short term is pensive and is waiting for that area here. I'm really putting high importance here down to this level. Okay, we're really waiting for this to happen here. Right, so this is why the shorter time frames are not indicative of complete bear strength. It's allowing the bears to take control temporarily for a validation process to get to be completed before the continuation to the upside. That team is massive. Okay, so now back to the 12-hour time frame. Let's get away from the from DBSI. And let's go ahead and take a look at this. I mean, first of all, yeah, we're bouncing from that SMA 50 on the 12-hour pretty nicely, right? So let's go ahead and notice this. We have ladder 1, ladder 2, 3, 4, 5, and this is 6. Okay, team, remember what I say, that when you're looking at ladders themselves, usually when anything after 3, your probabilities start increasing. So it increases at test 4. It increases at ladder 5. Your probabilities yet again increase at 6. And yet again at 7, 8, or 9, this count that I'm giving you doesn't have an end to it. Okay, it is particular. It is particular for a ladder. Okay, now the broadening descending wedge, that has a particular rule. Test number 4 and 5 are true breakouts. 6, 7, 8, 9, very sketchy. Okay, one more thing to notice within this chart, team: declining volume. Very clean declining volume here, and we have declining price. What does that mean? Well, that means that the bear pressure is starting to minimize, which also lines up with the DBSI indicator telling us that we are 50-50 across the board in the immediate short-term timeframes. All of that, team, is aligning very well. Okay, so I really needed to share this, and damn it, I feel bad that we looked at the one chart the entire time. See, 8-hour time frame, the ARQ Armor algorithm is telling us short. We're getting short signal, and also the enhanced MACD volatility versus momentum ARQ algo also showing us short, and it's not ready. So this is yet again indicative of a continuation to the downside. Okay, team, this is where I'm seeing that we may be facing a short-term downside, and it's also lining up with DBSI telling us 50-50 all across the short term. Check out the bi-daily RSI signal versus the SMA 14. This is clearly coming down to the SMA 14 defined support, but not support by just the SMA 14 in the gravitational zone of the bear weakness percentile. Bounce from that SMA 14 to the upside, which would be very clear since this is a shorter time frame than the 3-day time frame. And look at where the 3-day time frame is. It's already at the SMA 14. I mean, it could face ever so slightly a further downside here to find that support. And why does that sound familiar to us, team? Well, that's freaking right. Let's pull up the daily time frame. Let's get up our moving averages one more time. And what is that looking like here? Very tiny pullback before a continuation to the upside. Right, so that's essentially what I'm looking at in full discretion here, team. Remember that this is discretionary. Nothing I have said here has been back tested. Nothing I have here has been statistically figured other than DBSI, the statistical averages that we're getting based on strength. Okay, team, that is what I'm looking at thus far. Please take that into deep consideration, team. But that is the play that I'm looking at, okay? But what I do need you to do is to please remember that I am not a financial advisor. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Hit me up if you want these indicators. We'll get you situated, okay, team? But with that said, I wish you well a very good night, and I will catch you at the bell on Monday, okay, team? Adios.